Hello everyone, good morning. My name is Peter Coutinho. I'm a product manager at Paytm Money. We are doing series of budget talks and that is on Twitter Spaces to educate our investors. Today we are here with one more budget topic. This topic is budget boosters. Top 5 sectors to watch for this year. This is a very interesting topic and I'm very excited to learn from Aditya and Shankar Mukherjee. We are here. We have a speaker, Aditya Shah. He is a chief investment officer at JST Investments. Mr. Aditya Shah started his investing journey at the height of financial crisis in 2008. Aditya Shah has extremely deep understanding of BFSI sector. He is a CFA and he was one of the first one to warn the street about the crisis of S Bank, DHFL, and cooperative banks, and many more. He bought two banking stocks in 2008 crisis, and he's holding. And those two stocks has created a lot of wealth for him. His quotes are taken in like a lot of many print medias, and he's a regular guest on CNBC Gujarati. Um, Aditya, welcome to today's Twitter Spaces.
Thanks, Peter. Thanks a lot for that kind introduction.
Yeah. And we are with Shankar Mukherjee. He's another speaker for today. He's a trading expert and ed coach at Paytm Money. Shankar, welcome.
Thank you, Peter. Thank you.
Yeah, great. So let's start with today's discussion. And my first question to Aditya Shah. Aditya, tomorrow is the budget. What is the expectation from the budget? What is your expectation?
Thanks, Peter, for that question. So, budget more and more, the budget, what really is happening in the budget is that the tax cuts or the taxation side of changes on the budget are becoming less and less as the government has very little money to play with. On the taxation side of it, we expect very minimal changes from the government because government is totally drained out of revenue and the expenses for the government continue to rise at a very steep pace, which means that the fiscal deficit is a big problem for the government. Government is using indirect finances to fund their expenses that are there, which is the PSU companies and other things that the government really uses. But on the spending side, the real boost will come on the spending side of the budget. The economy has gone through a very severe downturn in the last 2 3 years, and the government is taking all the right steps to boost the economy. So major steps will come in the cap goods and the infrastructure space, where the government will try to spend more and more money so that the economy starts to stimulate. Another area where the government will take a massive push is the linked incentive schemes, PLI scheme, where the government will try to give even more jobs to the domestic manufacturing companies so that the Made in India project and the China Plus One project does start to come about slowly and slowly. And the other thing where the government will give a massive push is the electric vehicles. As more and more technology for electric vehicles will come in, the government will try to make sure that the production stays back in India, as India is a big hub for automobile industry that is there. So all in all, on the taxation side of it, we expect very minimal changes. Direct tax, very minimal, very few changes will happen. A little bit of tinkering here and there will happen. Other than that, no major changes. Anyway, on the indirect tax, the government cannot do anything as GST Council is there for the indirect taxes. But on the spending side of it, the government will try to make sure that it spends as much as it can so that the economy starts to stimulate over the next 1.5, 2 years.
Yes, right. Aditya, after this COVID, we spent last 2 years with this COVID. Maybe this budget may be the challenging for government, right?
Yeah. So in the last 1.5, 2 years, government's budget has been a little bit hit by the fact that they had to spend a lot of money on the healthcare side of it. So that's another area where the government will also try to push a lot of thrust that India's healthcare spending is really very poor was really poor over the last 5, 7, 10 years. Now the government is starting to realize that it also has to spend on healthcare. So a lot of trust will also be given to healthcare, to development of vaccines, and to healthcare in the small and rural areas that are there. So that is there. But of course, because of COVID, what has really happened is that the government's headroom to spend a lot of money on, say, tax cuts is not really there. So that's the whole problem that we are facing because of the COVID crisis that are there. But all in all, the government is trying to do the best it can. Also, we need to look at the divestment process. If one or two big divestments are announced in the budget, which they will, it will give a huge boost to the government revenue that is there, and the markets will be very happy, as they are happy after the Air India divestment, that the government is pushing ahead with its agenda of divestment, and good assets will come in the private market to invest in for the private people.
Right. So, Shankar, the same question to you. What you are expecting from budget?
I think Aditya has explained very nicely about the budget. I think there are two, three things which we should look at. One is your ethanol production, which is like the government is increasing the limit of mixing that with our petroleum products. Now, this year, the sugarcane production has been quite good, and we expect, I mean, that's my expectation, is that a bit of help might come or demand may come for the sugarcane industry. That's one area. Second, the two areas which I'm looking at, one is agriculture. See, I don't expect any major announcements for agriculture and major farm waivers for the agriculture industry, because the produce has been very good in this year. Like I was speaking to one or two of the farmers, so from places like UP specifically, so their produce had been quite good, and with God's grace, I mean that's a good news for all of us. So maybe in this budget we may not see any much of those dependency on the farm loans and all coming up. And the third is the edutech sector, the education sector. So mostly industries which are like changing with time and then moving into edutech business at this moment where they study, they make their kids study from home, and that adaptation is happening. I think that space would also be interesting. So that's agriculture and edutech, addition to sugar industries with what Aditya said.
Right. Aditya, there are many elections are due, right? Maybe in coming months, some elections will come in India and next year also. So, do you expect this budget is progressive or development focused?
So irrespective of the budget, what really has happened over the last 3 years is that the economy has taken a pretty bad hit in 2018, 19, and then after COVID. COVID was really bad. The first year of COVID was really bad, and now things are really recovering. So the major agenda of the government is to help the economy really recover, and that's where the government will come out not with a populist budget, but with the agenda of developing, with the agenda of spending as much as it can on the development part of it. So the easiest way to do it is to put money in infrastructure sector. Infrastructure sector generates a lot of employment for direct industries catering to the infrastructure and indirect industry. So that's point number one. And the biggest factor on the biggest spender on the infrastructure industry is the government. So they will try to push more and more towards the infrastructure so that a lot of employment is also generated. That's the first point that is there. The second point that is there is government will try to push the made in India concept or the China plus one concept, because it sees that there's a lot of scope to do China plus one and get some production out of China into India, be it on the specialty chemical side of it, be it on the pharma side of it, be it on the auto side of it, or any other manufacturing that the government wants India to do. So that's the second part of it, where the government will try to give more and more incentives to the domestic manufacturers, which they are already doing, and they will do more and more, and they will try to stop imports of a lot of commodities that India really imports. That's the second part of it. On the healthcare side of it, um, seeing the COVID concerns that are really there, the government will come and say that they will incentivize more and more vaccine manufacturing and pharma product manufacturing, such as medicines and all sort of those things that are really there. So what the government will really do is that it will push its development agenda. It will push so that the economy, which is at a cyclical low over the last 2 3 years, will start to recover. And on the populist side of it, it will just try to think us here and there with the taxation part of it. Other than that, it will not try to do anything else.
Right. Uh, like in global markets, there is a lot of correction of already we have seen in recent days, like from last 1.5 month. Even in India, also from 18,000 Nifty from 18,500 or 600 level to 16,800 level, we have seen some corrections. So this is all because of some fear of rate cuts and inflation and those things. So what is going to be impact of inflation or rate cuts in global market to India market? What's your thoughts?
Okay. So what is really happening is that we are not on a cycle of rate cuts, but we are on a cycle of rate hikes now, where the US Fed has already said that they are going to start increasing rates as early as March. So what was happening was that the market did not expect the US Fed to turn this hawkish so soon. So now what the valuations are starting to adjust to the fact that we will no longer be on a low interest rate regime where the interest rate is at 0%. And but the Fed is targeting an interest rate in the next 1.5 2 years of nearly about 1.5 to 2%. That is there. So what is happening is that the market had run up big time on the expectation that this easy money will continue, but that's not the case. The US Fed is taken note of inflation, which is rising in the US economy, and slowly they have said that they will start to increase the rates. So the market will adjust slowly and steadily. But this was a shakeout correction that is there. There's nothing to worry about. The markets will slowly and steadily adjust. When the event does come in, the market will automatically adjust to it. There's nothing to worry about. Corrections are part and parcel of the market. There's nothing to worry about. In fact, over the last 1 year, there was no correction, practically no correction in the equity markets, which is very, very scary. Markets don't go up in a straight line. They go line by line. They go up, down, up, down, up, down, just like a heartbeat that is there. So there's nothing to worry about. However, irrational valuations, if they are inside stocks, they will tend to correct over a period of time, not tomorrow, but over a period of time. And investors should be wary of buying stocks at any valuations. However, markets are okay, markets are fine. There's nothing to worry about from the higher interest rate regime that is going to come in over the next 2 3 years.
Yes.
Peter, I would like to add this. Like, this is something for people to understand. Rate cuts are going to come by default, and that's going to happen. That's a reality. Inflation is something which is a global concern right now. But rate cuts, if there is inflation, the corporate earnings are also quite high parallelly. But rate cuts, the scariest part which had happened was in 2015, where this tapering happened, and then markets corrected nearly 25-30% from there. So that was the fear that there will be rate cuts. But when the actual rate cuts started happening, the markets were they adjusted. And right now in the current scenario, the market doesn't look like that. I mean, the rate cuts will create a big impact. That's my personal opinion, of course, but there will be some corrections may happen, and that's a part of life. Markets will move up. It has given more than close to from January onwards, like given more than 50-60% run up, and now coming down a bit doesn't really matter much. It's a reality. It can come, but it will not impact much. That's my take.
Shankar, do you expect like our market will outperform global market in this year or coming years? Like if we come out with a very good budget, but there is a like a lot of fear of inflation and rate cuts in the global markets. What is your thoughts? Like, are you expecting like outperformance?
See, my personal view is like, if you're looking for long term, where do you invest? Do you invest in large cap or small cap? So, and the returns which you get in small cap is much higher than large cap in long run, of course. Now, India, if you look at it, it's a global small cap or maybe a micro cap with just 3% weightage there. It's a very small. It has a very small weightage in the global economy. So, if you are looking right now at the markets and you think it's India is going to do well, definitely in long run it will do well. But when people are scared, what do? They move out of small caps and move into large caps. That's something which we all do. Always, like, if people are a bit scared, they feel the valuations are high, they tend to do that, isn't it? The same thing is happening globally as well. So they're shifting out from the smaller economies and putting bets on parking money in the larger economies or in debt market, because if the rate of interest increases, the dollar will appreciate, and so will India also. To match that up, we will also have to do some kind of uh, interest rate hikes, so we may also have to do that as well. So
Right. Aditya, I have a question for you. It's very difficult to predict the market. Still, after the budget, what are the levels for the market you are expecting post budget after Indian Union budget?
See, in the short term, it is very, very practically impossible to predict what the markets will really do. For
Right.
example, let me give you an example of 2018, the day when LTCG was introduced. The market was pretty quiet. Nothing happened. 5, 7 days down the line, also, nothing happened. But that marked the top of that cycle, and we never reached about 11,000 for about 2.5 years. That is there. So it is really impossible to predict what the market will really do tomorrow. It will all depend on how much power, how much development agenda the government tries to push in the budget tomorrow. However, uh, predicting the market is least of the concern for the investors. What they should be really doing at this point in time is that they should be looking at the earnings that the companies are really posting and figuring out what is the quality of the earnings, how is the company really doing. If the companies are doing really very good, for example, in the BFSI space, in the banking and financial services space, most banks have done really well over this quarter, which has not been the case over the last 2 years. Banking stocks have underperformed, and that does not mean that just because they have underperformed, you go ahead and sell those stocks. Those stocks will do really well as the cycle moves on. Your job is to predict how these stocks will really do. Uh, your job is to predict how these businesses will really do over the next 1.5, 2 years, and the stock price will then automatically follow what these businesses are really doing. So my suggestion to all the investors who are out there, if you are long term, don't worry about the budget, what the market will do tomorrow. However, focus on the fact how these businesses are really doing in the result season. If these businesses are good, even a 20, 30, 40% correction will not matter, because good companies, even if they correct, they do come back. Not a problem. However, if you have bad companies, make sure that you exit out of them. However, levels unknown, don't know about the levels, because as Warren Buffett really says, only two people know what the markets will do in the short term. One is God, and the other is the guy.
right, Aditya. And if you look at what Aditya rightfully said, and he followed the quotes of Warren Buffett, it's very true. You cannot predict where the market is going to go, but somewhere, if for short-term traders, if you're looking at, so maybe you should look at the open interest analysis, and that is showing that the market will face some resistance for this week expiry, somewhere around. I'm referring to the Paytm FNO dashboard there. So it's around, they're showing 17,300, where there's a huge call writing has happened, and then 17,500. So if the market starts moving up and these call writers get trapped, then they will start unwinding their positions. So writers, if they start unwinding positions, that means they will be buying, and then there can be a good rally after the budget. But again, this is just speculation, as I said, and one needs to look at it. On the downside, right now, 17,000 looks like a very strong support. If you look at the put OI, so 17,000 is having the highest OI. So I don't think the range for this week, that is till the expiry, looks like 17,500 to 17,000. That's the range. And if it breaks on any of these sites, it will just take a momentum. So
Right.
that's one observation. And for the year, my expectation is 19,500 to 20. Sorry, first is 19,500. Second, I'm looking at is 20,000, and then roughly around 20,500. These are the levels which I'm personally expecting to come. But of course, these are all speculative levels based on technicals, and if things change, we also change, and our targets start happening coming downside. So take all these with a pinch of salt and keep monitoring. That's my suggestion.
Yeah, pre-budget, we have already corrected a lot. We are going to budget with some of the corrections. So there may be some, if the budget is good, then you're expecting some good move, right? Yeah.
Yes,
So,
yes.
so next question to Aditya, it's a very sector specific, like which sectors you are expecting to get benefit?
Hi, hello. Hi, Peter, you got cut out.
No, I think he muted himself. So yes, Aditya. So which sectors during this budget or post-budget are expecting the rally to come? That was Peter's
Yeah,
question.
Aditya, sorry, I dropped. Maybe
Yeah,
there is a
yeah, yeah,
problem
yeah. No
with the
worries
spaces,
about
I
it.
think. My question
Yeah,
was,
yeah,
which sector you
yeah.
are expecting to get benefited by budget?
Yeah. So 4 or 5 sectors could do really well. On the as I said, on the biggest sector which should do really well is the cap goods and the infrastructure space, the road makers or the infrastructure makers. The government will give a massive push there because that is the easiest way for the government to push the economy and push employment in the economy. That's one part of it that is there. Second part of it is on the IT side of it. On the IT side of it and the banking services side of it, the push on the digital economy that is there. Digital economy is single biggest source for the government to flush out black money that is there. That's point number one. And point number two is the world is moving towards digital. The government has to move towards digital. So how much trust the government will put on the digital side of it remains to be seen, and that will give a lot of advantage to all the services IT companies that are really there. Sector number three will be the healthcare space. The government's focus is now back on the healthcare space because of this pandemic. The government is pushing for a lot of vaccine manufacturing across that should come into India across the world, as well as providing special facilities to the pharma companies so that they can expand manufacturing here. That is the third part of it on the healthcare side of it. Then again on the PLI scheme, the PLI scheme is the single biggest source of getting manufacturing into India over the next 5, 7, 10 years. So for the PLI scheme, the specialty chemicals should benefit. The auto industry should really benefit because India is a very big hub for auto manufacturing that is there. The white goods that are really there, the washing machines, the mobile phones, and stuff like that, they all should get a real big boost from the PLI scheme that is really there. On the banking and financial services space, the government's intention to create a bad bank is coming fruits now. So the government will invest more towards the bad bank side of it, and that will finally come. That will finally become a reality, and that should help banks to give away their bad assets that are really there. So these are 4, 5 sectors that could potentially do really well. But as I said, the broad agenda of the government will be not a populist budget. However, it will be a budget where it will try to kickstart the economy, the economic engine, which had fallen down much before COVID, and COVID accelerated the downfall. And from here on, the government will try to stimulate the economy back into shape.
Right. Shankar, what is your expectation? Which of sectors may get benefited? Shankar, can you hear me? maybe Shankar dropped, I think. Aditya, okay, you have mentioned many sectors. So can we talk about some stock specific, like maybe it's difficult to predict, but for say IT sector, so if it is get benefited, then which all stocks you're expecting maybe the beneficiary of this budget?
Yeah. So on the IT side of it, let's say, for example, if we talk about the IT side of it, digitalization is a major theme that is being played out over the last 1.5, 2 years. A lot of companies are reporting very strong demand, not only from abroad but within India as well. Very strong demand from companies to go digital. So on the large cap side of it, you can look at larger companies like TCS and Infosys, or NHCL Tech also does. But the real juice, the real return generating power is in the mid cap IT. In the mid cap IT, you can look at product based companies, or you can look at the services based companies. Product based companies include companies like L&T Technology Services, or a Tata Elxsi, or an L&T Infotech. You can look at them. But these stocks have had a massive run up. For example, Tata Elxsi has had a 10x run up over the last 1 year. So you need to be very careful about the valuations that you are really paying. However, for the next 5 7 years, digital is the theme. Digital is the play. Not only in the Indian economy, but in the world economy as well. So the scope is very strong. However, the valuations are expensive. Wait for a little bit of correction to buy into these stocks. However, good potential is there, right?
Right. That is a concern actually. Valuations are high, but recently IT sectors has corrected a lot, right?
Yeah.
In this.
Yes, yes, definitely. From the top,
Aditya, I can't hear you. Harsh, can you hear me?
Yeah, Peter, I can hear you.
Yes, yes, now I can
yeah,
hear you.
can you know?
Sorry.
Yeah, Aditya, I can hear you.
Okay,
Go
yeah.
ahead.
Okay, sorry, I just went on mute. Uh, okay, I will complete this. The demand scenario. There are two things on the IT sector. The demand scenario continues to be very very strong. NASSCOM says this, that the IT growth before 2020 was around 4 to 5%. Now that has jumped up to 14 to 15%. And every company that we talk to really says that over the next 3 years they are fully booked within the demand scenario. So for the next 3 years, the demand is very strong. After that, only time will tell how strong the demand really is. However, the valuations to some extent bake this strong upcycle in, and we have to wait for a little bit of correction. From the top, many stocks have seen 15 to 20% correction. That could be a good opportunity to get in. However, you have to go in a very slow mode, accumulating these stocks, because even after the 15 to 20% correction, the stocks still look a little bit expensive.
Right. So, Aditya, there is a like interesting sector is automobile. That is also EV sector, electronics, like vehicles. So, what is your thought about this? There is like a lot of semiconductor shortage and everything. There is a lot of challenges. And what's your view on EV sector?
Our view on the automobile sector is very, very positive. EV is not a disruption, it is an opportunity for many companies to do really, really well in the economy. That is the first part of it. Who will do well, who will win the EV race in the two wheelers and four wheelers is very unknown. At the current stage, the EVs that are really being produced by, say, Tata Motors, or by Ola or Ather or Hero Electric will not be the end EVs. The end EVs need to have features such as very fast charging. If you're able to charge the batteries very very fast within 4 5 minutes, then mass production of these EVs will be viable. That is out there. At this stage, within the Indian OEMs, it will be very difficult to predict who will win. So we tend to stay away from them, and that is what is reflecting in the stock prices of all these guys, where Hero Motocorp or a Bajaj Auto stock have not done anything over the last 1.5 2 years. However, the opportunity lies in the smaller auto ancillary space, where a lot of these players are getting up a lot of EV products. For example, one of the auto ancillaries that is there is supplying to Tesla. Right? So you have to look for players who are getting EV products ready, and who will be supplying to OEMs that are there. For example, there's a company called Fiam Industries which is supplying to Ola for their headlamp and tail lamp for their two-wheelers that is there. And these companies will do really well because even if EV comes in or it does not come in, it will not matter to them because anyway on a normal IC engine scooter or on a EV scooter, uh, their product will always be used. So look for players who will be able to supply to the EV guys. However, on the EV side of it, it will be very difficult to predict who is going to do what, who is going to win. On the two-wheeler side of it, companies like TVS Motors are investing in their capacities. Companies like Hero Electric, not Hero Motocorp, but Hero Electric, Athos, they are investing and they are producing scooters, but it remains to be seen who wins. So broadly, very positive on EV. Right now, very difficult to predict which OEM will win, but very positive on the auto ancillaries who will supply all raw materials to the EV makers so that they are able to make their EV scooter, and these guys have a lot of potential. The auto ancillary side.
Right. There is a lot of potential, like maybe positives. We have to continuously track which stock will win the race, and we have to invest on those stocks, I think.
Yes.
Shankar, one question for you. Like after this COVID, there is a lot of buzz or healthcare sector and insurance sector. What is your thought, and which of stocks may get benefit?
See, for me, if you ask me, right now, see, COVID has hit, and now we are expecting somewhere rates are going to be increased globally. So first and foremost, let us first segregate if there is a rate hike, which kind of companies will, which kind of market caps will get impacted. So most importantly, the small caps which mostly lives on loans or that easy money, they will get impacted. So maybe I personally feel it's a good time to shift from small caps to mid cap and large caps. So that's one area which I think we should look at because small caps had given very good returns last year. Um, from some point of time, like the index itself has given close to, till the peak, it has given close to 150, 200% return. So that's quite good. So it's also good for people to book some profits there. That's one area. The second thing which I'm looking at different sectors, I think for me, personal favorites will be pharma right now and banking because post budget, generally we have seen that PSU banks get some benefit. So in the banking space, maybe PSU banks would be a good bet. Nifty financials, of course, that is also quite good to look at as a financial services. And in Nifty financials, there are a lot of companies which one can look at. So Nifty financials. So in Nifty financials, I would recommend like looking at the top 10 kind of stocks. So that would be beneficial. So there you have mostly the banks, ICICI, SBI, Axis, and then you get into the other stocks like Bajaj Finance. So that's also looking quite good, and good value buying. And insurance companies and AMC companies could be a good bet. See, why I personally prefer insurance companies right now, because insurance companies are in a state like people are scared. So when they are scared, they buy insurance. I mean, you can ask most of the insurance agents, so they sell primarily the fear, and we are all very scared. That's one. So that's my favorite. And AMC companies, why they are my favorite? These are all my personal favorites because AMCs, if Nifty doubles from here in the next 5 years, 10 years, their income is also going to double by default. So even if they don't do anything, the asset under management will increase. And if that increases, their revenue also increases. So in financials, My favorites would be insurance and AMC. Of course, the finances are also private finances are also good to look at right now. And for if people are very scared right now, they can get into private banks. But for the budget swing, maybe they can look at PSUs for the time being. And Peter, I would also suggest this to audience here that instead of getting into stocks, if they're confused with stocks, because we cannot recommend stocks, uh, they can get into ETFs, which are quite focused in these areas. ETFs or mutual funds. There are a lot of options available nowadays.
Right. So we have discussed a lot about the budget and budget expectations, budget sectors to be performed, and some of the stocks. Audience, these are only for the educational purpose and not the recommendation. Any stocks. Uh, Aditya, one question for you. It may be my last question to you. What would be the last advice for our audience?
Uh, on the budget side of it, it's very simple. Do not worry about budget or all these events that are really there. If you are on the cycle of long term wealth creation, these are very small events that are really there. They don't matter even if the market falls by 10-15% post the budget in the next 1 month. It does not really matter because good compounding companies will continue to compound irrespective of budget or irrespective of even a bad quarter that the company really has. So don't worry about the budget. If the market really falls, use it as an opportunity to buy into very good compounding companies that are really there. Get rid of poor quality companies that are there. That is the second part of it. And if in the budget something comes as a negative surprise and the market corrects, it's a good opportunity to buy. And if you are not able to decipher what the market is really doing, uh, as Shankar rightly said, that you should be investing in an ETF or a mutual fund that is there. And my last comment would be do not fall for budget stocks or stocks that will move up on the back of budget. It does not work. Companies don't make money just because the government has increased or decreased a little bit of tax inside the
Yes.
budget. Good long-term compounders make money over a long period of time, over 5, 7, 10 years. If you give them money, they will make good amounts of money, and so will the stock price move in that direction. So that's about it. That's what you should be really looking forward to.
And adding on to what Aditya said, you know, generally government comes up with schemes and stuff which supports a certain industry. So if they're coming up and supporting a certain industry, one needs to understand why are they supporting it? Because those industries need support, right? And that's the reason why it's very important to understand the other industries don't need support. Those industries need support because maybe they don't have a good cash flow. Maybe they have some issues there. So that's something which one must accept and understand. Peter, any questions for me? Hello.
I think he's
Okay,
dropped off.
okay,
He might be having
okay,
some
okay, okay.
glitches.
Sure. So then let me just share my thought there. My thought is like, okay, we spoke about the five sectors, important sectors, which had been our favorites. Okay. So with Aditya said, he had some favorite sectors. I shared some of my favorite sectors right now, and including the market caps, which I'm looking at. But if one is a good investor, the good investor is someone who diversifies his portfolio. And currently, one should look at some of the strategic indices at the strategic stocks as well. So those lists you can get in strategy indices. So, like for example, right now, my personal favorites are quality. So quality indices. So one can look at quality indices and value. So you can pick up stocks from there as well because these are the two areas which are going to do well, quality and value. That's going to do well. Growth is still growth index is quite overvalued, and they may come down a bit more. Is my personal indices, which right now is looking good. I can look at quality, of course. That's though it's quite highly priced, but that one can look at easily. This third one, which I would suggest, one should look at in terms of your indices, not right now, but one can look at your uh, Nifty low volatility index. Why I'm saying Nifty low volatility index? Nifty low volatility is primarily for people who don't want volatility in their portfolio and slowly wants a steady upswing. So that's again a very good index which you should follow. Or like we say, sectors, banking sector has stocks. So similarly, Nifty 100 low volatility index, low volatility 30 is a good product. I think you should go there and see the stocks in the list. That would also be very good for people who are looking for less volatile for their for their portfolio, less volatility for their portfolio. Like you have NTPC, Wipro, ITC, Power Grid, HDFC Bank, Infi, Reliance, all good companies there. So pick up top 10 maybe, and maybe you can rebalance them from time to time. Asset allocation is again a good thing. I think we should look at if we feel that markets have gone up substantially, given over 75% return or 50-60% return, if your portfolio is giving you that kind of return, maybe look at relook at rebalancing your portfolio for once. So that would be my final words. So I think Peter is back. So stick to Peter. I think one thing is people should not look at short term. Like Aditya said, people should not look at short term. So I've seen this in 2000. I've seen this in 2008. I've seen this in 2015. I've rate cut, like, but every time markets have fallen, it has bounced back. It has bounced back and doubled actually. So we should not be scared of the short-term market jitters and look at long-term India growth story. I'm betting in India. If you don't bet in India, that's your personal choice, of course. What do you say, Aditya?
No, you are right. The when somebody asks me about the stock name on a Republic Day or on a budget day, I say that you have to bet on the stock or the country named India because there's massive potential and nail on the head that you have to be very, very bullish on the country or the stock named India, right?
And Aditya, today, nowadays, we do have a lot of products. In 2008 crash, and I still remember, we only had a few ETFs. Now we have
Yes.
so many ETFs. People can just, if you can't make out which stock to buy, if you don't have the time to study which index to follow, just buy Nifty 500, Nifty 50
Yeah.
indexes, your ETFs, and that takes care of all your problems. Even
Right.
nowadays, we have sectoral ETFs. We can't even, there's no need to pick and choose stocks. Isn't it nice nowadays?
Yes,
Things have become
definitely.
so advanced.
As the markets, yeah, as the markets become more and more developed, a lot more products are coming in, which are really helpful to the investors. For example, index funds or ETFs really help the investor to make money at no cost, practically no cost. A little bit of cost is involved. But you're right, as the markets get more and more developed, even more products from here on will start to come in and help the investors who have practically no knowledge about the financial world to invest and make good amounts of money for sure.
Right. So, audience, Aditya's message is very clear. Invest for a long term, and if there is any correction after budget, then use this as an opportunity to buy good stock. When like large cap stocks, you can buy, and also if you're finding difficult, then you can invest in ETFs also. If you have any queries, if you have any questions, you can reach out to Aditya on Twitter. He has shared his email ID also, so he may answer you, and even you can reach out to Shankar. He also answer your all questions. So it was a very insightful session, Aditya. Thank you very much for joining us and sharing your thoughts with us.
Thanks a lot. Thanks a lot for having me.
Thank you,
Shankar,
Aditya. Yes.
Shankar, thank
Peter,
you. Thank you very much for joining us. Yeah, Shankar,
thank
you were saying
you.
something.
Yes, it was a pleasure, and I want my audience to know one thing. India is just in a bull run. Don't bet against India. Just keep on investing, keep your convictions for the long term, and stay invested. You wish you all the best and happy investing, everyone here.
Yes.
Thank you,
Happy
Peter, for
investing.
hosting
Yeah.
me.
Thank you,
Thanks,
everyone. Thank you,
Peter.
Shankar.
Yeah.
Thank you, Aditya. Thank you,
Thanks.
everyone.
Yeah. Thanks a lot.